It's another video. We are trying to drive a lesson from this book, and this guy in the book, Rich Dad Poor Dad, insists on spending more money acquiring assets other than liabilities, and he gives the cash flow patterns of different people of different financial classes. We already saw the cash flow of a poor person. Now here is the cash flow of a middle person. So let's see what gets to happen with the middle class people. So this guy is earning a job, and he gets a salary. If you can remember, the cash flow pattern of a poor person was quite direct. The guy was earning a salary. The guy had a job, was earning a salary, and was using every coin in expenses direct. But for the middle class people, it is quite different. This is because the guy says that majority of the middle class people spend their money buying liabilities that they perceive to be assets. So they spend much of their funds buying liabilities, but they perceive them to be assets. And he says that the biggest task that you need to do is getting the ability to differentiate between assets and liabilities. And he said that assets is anything that will bring money into your pocket, and liability is anything that will take money out of your pocket. So for the middle class, the case is different. So they have a job, they get a salary, but that money does not go direct to their expenses. The middle class people use this salary to create some liabilities. But remember, as they create these liabilities, for them they perceive them to be assets. So what kind of liabilities that does the middle class people create that they think they are assets? Number one is mortgage. We know mortgage is something to do with housing, because when you start making money, one of the things that comes to your mind is owning a home. And majority of the time you find that you are not able to fully pay for the process or for the cost of owning a home. So what do? You go for a mortgage. You go for a mortgage. So that is a liability that you have created, but in your mind, that is a liability. Okay, in your mind it is an asset, but in the real sense, it is a liability. So the other thing that the middle class do is after you start getting money, maybe the public transport automatically start becoming uncomfortable. So you go for a car, and remember, maybe you already have a mortgage that you are paying, so you might not be able to fully pay for a car. So what do? You go for a car loan. So for you acquire a car through a car loan, thinking that that car is an asset to you, but you have just created another liability. The other liabilities that majority of the middle class find themselves in is things like credit card debt. That is where you have a card, you can pay for things, and you pay later. Most probably it is deducted from your salary. The other one is school loan, maybe for yourself to advance your education, or even for your kids. So we have used the salary to create a liability in our balance sheet, and we said that the two crucial financial statements that you should be able to interpret is the income statement and the balance sheet. So we have used our salary from the income statement, and we have created liabilities. Now these liabilities are the one now that creates expenses for us. So tax is obvious. If you are working, you have to pay some money to the government. So that is a major expense that you cannot avoid. Then the mortgage that you took to purchase a house create an expense of mortgage payment. You have to pay for it. The car loan creates an expense for the car payment. You have to pay for it. The credit card payment, it is an expense you have to pay, and it is and also the school loan. It is something that you have to pay. So you see the cycle. An income job brings an income. We use the income to create liabilities that we think are assets. Then these liabilities creates expenses that carries all our money, leaving our column for the assets empty. So at this point, we have not still got it because we said that we should spend our money buying assets other than liabilities. But what have we done? We have used our income to create liabilities instead of acquiring assets. So that is the general cash flow of a person in the middle class. And to avoid this kind of a pattern, definitely you have to go the road not taken. So this is not a cash flow to copy. You have to take the road not taken and try and ensure that you have some entries in this column of the assets. Don't have so many liabilities while your assets are empty. So that is it.